All right. What is up, everyone? What's up, traders? What's up, tycoons? Let's talk about Netflix. Okay. Now, Netflix just reported their earnings. We see very nice move in price there, closed up 11%. So what we're going to do in today's video is just go over some key metrics, all right, that we're taking a look at, on Netflix. We're going to do a little bit of some comparison analysis when it comes to PE ratios for Netflix versus something like, Paramount or Warner Brothers, Disney. We'll also take a look at the gross profit margins. And then we're going to really dive into a few different things. All right. We can run down their financials, okay, do a little bit of technical analysis. I'll give you guys some of my price targets on that. All right. And then we already kind of talked about the comparison analysis we'll do. What's really cool, okay, and today we're using the OpenBB terminal, which is free. Okay, they do have a paid plan. I'm not sure what that all entails, but they're not a sponsor or anything. They're just a really great platform. All right. And I've been using them. If you guys are in the Discord, we have the OpenBB bot in there that you can do a lot of really cool things with. And what's cool about this is you can see, the portfolio weight percentage, all right, from people like Morgan Stanley, Bank of America. You can also see, what their average price is. Okay, so you can see, filter it, right? You can see who got in super low, who got in relatively high. All right, you can see the percentage change in holdings via the last time that this was updated on the filing dates. That's really cool. I find that really interesting and cool as well. You can take a look at the insider trading here also and see who it was. So the OpenBB terminal has a lot of great features in it. We'll talk about some of the analyst estimates. All right, and this is another cool feature I like. Now you can sort this by price target. Okay, and we can see that some of the price targets are up here at 925, 900. Those are going to be from Pivotal Research. And JP Morgan coming in at the third highest price target here of 850. All right, now let's go ahead and talk about their earnings real quick. You see the stock right now is at 763, so that's about another 100 points to go almost, roughly, to hit JP Morgan's price target. And you can review all of the news, right? The recent news. Lady Gaga, Mark Cuban, Bernie Sanders, Fauci, and more join Bill Gates' new special. I have always loved learning. That's just kind of some hype around it. But if we take a look, all right, and using the ChatGPT Copilot, okay, that is in the OpenBB terminal. All right. Based on the company news and closing price of Netflix, we can take a look that Pivotal Research still maintains a buy rating and raised its price target from 800 to 900. We just looked at that. Everscore maintained an outperform rating, increased its price target from 710 to 750. And if we take a look at where we're at right now, we're already above. So it's always kind of odd to me whenever people raise their price targets and say outperform, but their price target is below where the price currently is. That's always a little interesting to me. But as far as commentary goes, the market sentiment towards Netflix following its Q3 earnings release appears to be positive. The increase in price targets by analysts suggests confidence in Netflix future growth prospects. All right, the closing price indicates a strong market position, and the strategic initiatives in content and global expansion are likely contributing to this optimistic outlook. So, strategic initiatives in content, right? We kind of talked about that, or not really, but that's what they're doing right here with this Lady Gaga, Mark Cuban, Bernie Sanders. They're trying to get big headlines, right? Big names to, be a little more strategic with their content. And then the global expansion. I'm not sure if you guys are getting the same thing, but I'm getting tons and tons of foreign stuff, like more and more each day now popping up into my Netflix, right? There's like Indian movies popping up now. There's always been some Spanish stuff, but it's just more and more. A lot of times I can't tell if a Netflix movie is going to be in English, right? Um, but let's go ahead and let's take a look at some of the key metrics, okay, that they talked about. And these are going to be the financial growth metrics we're looking at here. Now, revenue growth, okay, they're looking at 15 revenue growth expected. They're looking for 6 percentage points improvement in their operating margin. And then engagement, they're looking at about 2 hours of viewing per member per day. Now, the revenue projection is going to be from 43 billion to 44. And as far as membership growth, a majority of growth is expected to be membership driven. Their ARM growth, their continued planned evolution and pricing, and then growing ads revenue. So that's one thing that they've been doing is, the new price tiers. So that's part of their, plan evolution is what they're naming it, and then growing ad revenues. The ad revenue growth is expected to roughly double year over year. Operating margin, we kind of talked about that, up 6 percentage points. The ads plan membership growth, that's really important. So the ad plans membership base is up 35% quarter over quarter. All right. The ads revenue growth, like we mentioned earlier, expected to double year over year. As far as their pricing strategy, they're looking at occasional price increases based on engagement and value delivery. And free cash flow, they're not looking at any change to capital allocation policy, focusing on profitable growth, right, is their main focus. Now, if we come back over here, one thing that I like looking at with the price targets, okay, and we can do this if we zoom in a little bit more, the orange dots are the price targets. These just simply follow price most of the time, okay? The blue line is going to be price itself. And so, where I'm getting at with that is we see the highest price target up here, 925, pivotal research. We're most likely not going to be hitting that anytime soon. If you take a look, the orange bubbles again are the price targets. The blue line, the stock doesn't really tend to get there in the near term, but over a few quarters, right, you start to see the stock gravitate towards that price. And so this is just a really cool way to visualize that and look at that. You take a look at where some of the price targets were over here. The highest one was 765. And again, this was pivotal research. This was on April 4th. Okay. And then we come back up here to the stock price, and we take a look at the stock price. And where are we at? We're basically at 764. So, like I said, over a quarter or two, these price targets do end up hitting a lot of time. And you can come in here and look at that, and you can even keep track of whose estimates you want to follow, right? For instance, you can go by firm, right, and sort these by firm name, and just take a look at which firms you like, whether it's Wells Fargo, Wedbush. Dan Ives is pretty famous over at Wedbush. Let me see if he pulls up here for Wedbush. Michael Pachter. So nothing from Dan Ives on Netflix, but we'll keep going and taking a look at the analyst estimates. And if we take a look at Q1 of 2025, we're expected to get over $3 billion in pre-tax income. Okay. And the EBIT is going to be over 3 billion as well as the EBITDA. Okay. So this is really, really good, right? We have not seen this. And of course, these are just estimates, okay? But these estimates are growing, these estimates are rising, and they're looking strong, okay? Over 3 billion is going to be very interesting to see if we can hit these numbers and get through to those, because as you guys can see, that's a threshold that Netflix has not gotten to or gotten past, previously, right? Now, we'll go back here and we'll do some technical analysis real quick. And I just want to show you guys, basically my views on the price targets, where this is going to go in the very near term, I would say, or I'm sorry, in the long term, where this stock can go. And if we just simply take a look, right, we're breaking out of a large base here. Okay, this is a large base. This is a multi-year base that we're breaking out of. These patterns often resolve with explosive moves to the upside. Okay. It doesn't always have to be, but if you take a look at how healthy this was, right? We had some overhead supply, right? There was some supply here. Okay, we're consolidating, right? Absorbing that overhead supply, breaking down, the price memory from the previous all-time highs. And look what we did, right? If we zoom in on this candlestick here, this is a very bullish candlestick. And the reason being is because of how long the tail is. So the tail actually came back in that prior supply, that demand zone, right? And turned that prior supply into demand. And now we're pushing up, closing at the very top, right? Closing at the very top. There's not a long wick above this. So this shows you that sellers tried, right? Sellers tried to push this down, but the stock market was in agreement on its price around its previous all-time high supply zone, right? And the earnings report is really what drove the stock up higher. Now, my price targets, okay, using the Fibonacci's, short term, you're going to be aiming for 847.50, okay? When I say shorter term, I mean like over, maybe the next 6 to 12 months. And longer term, Netflix is going to come up here into the thousands, right? I mean, we've seen these type of base breakouts happen time and time again. If we go and take a look at something like MU had a really explosive move, off of its base breakout, right? We come in here, all right, we draw our base. This was our original base that we had. And this thing just absolutely exploded, right? We come in here and let me draw the base for you so you can see it. Okay, this was our base, right? In through here. Okay, very explosive move, and came right up well past our 1.618 Fibonacci extension. So, I mean, this stock went from 99 to 130 in a very, very quick time. And that's typically, you'll see that a lot, okay? When you have these large resolutions, when you have resolutions from these large multi-year basis periods, right? It's very common for the price to just, skyrocket kind of in a sense, like we saw there with MU. So I'm not saying that this is going to happen short term, okay, that Netflix has to hit these two price targets within the next couple months. But, I think if you're a long-term investor and we're trading above 700, your targets are going to be 847 and then 1000, right? Let's just call it 850 and then 1,000 over the next 6 months, over the next 12 months, maybe even a couple years, maybe 2 years, if we continue to remain in a bull market. This is where Netflix is gonna be at, right? And if you're coming in here and let's say you're looking at this as a trade, right? So we'll put a stop loss slightly below the supply zone. Currently, where we're at right now is offering about a little bit less than a 1 to 2 risk reward ratio, or a little bit less than a 1 to 1 ratio. You can adjust this stop up here and put it, right below 700, like we talked about, and you're at a 1 to 1 risk reward ratio. But if you're looking over, a longer time horizon here, even an entry here, right? And again, above 700, we're targeting this 1,000 level, 1,033. That's over a 3 to 1 risk reward ratio currently where it's at right now. That's a good setup, right? Those are good setups. And whether it happens in a few months or whether it takes, a few quarters or even a year or two, this is a very nice setup, right? Oftentimes, timing, it can oftentimes be your worst, the worst thing for you when it comes to trades, right? Is sometimes people just don't have a long enough time horizon, behind their trades, and they want these moves all to be super explosive and super quick. Now, by the end of the year, can we hit 850? Yeah, that's definitely possible, right? I mean, we take a look at where we're at. That's only 11% higher. The stock just rallied at like 11% today. Okay. Now, obviously, that was because of earnings. But if we take a look at our next price target up here, it's about 35% higher, roughly. Okay, so we would expect that to take a little bit more time. Now let's dive into it a little bit more, okay? And let's do some of this comparison analysis that we were talking about. I really love this look and this dashboard that they have here. You can get all your ticker information right here. We talked about it just having an 11% day. It's about 11% from my next price target. You can come in here, see the beta. That's pretty cool, especially if you like trading high beta names, 52-week high, 52-week low. Here's your PE ratio. You can see the free float shares, the outstanding shares. Um, Now, and also I really like this too, the compensation part, right? You can see, what these people are getting paid, right? What are these people getting paid? And it gives you their name, their positions, chief legal officer and secretary, chief talent officer. Mr. Meeb, okay, is getting just under $4 million. Now, let's move down a little bit further, okay? And here we've got its PE ratio, price to sell, price to book. These aren't too clear. I don't like these too much. So what I really wanted to do was just some comparison analysis on the similar companies to Netflix and just kind of show you guys, why Netflix is such a beast. Look at the gross profit margins right here, okay? Netflix just behind Roku right here, which is honestly pretty interesting to me. the gross profit margins that Roku's got. But Netflix, leading the way compared to something like Disney. Now, what's really interesting is Disney's PE ratio is very high, right? It's above 60 right now. And Netflix's PE ratio is just under 40. It's right at 39.755. If we were to, come in here a little bit and just take a look at the PE ratio, okay, for Netflix, and, we can see that there were some times, right? In 2021 where the PE ratio was really, really elevated, right? Really, really elevated, 110, 69 back into 2020, 110. There are these periods where the PE ratio gets very, very high on Netflix. So where we're at right now is nothing crazy historically, right? I mean, we look at the PE ratios going back to all of these, going back to 2014, over 10 years. Look how elevated these PE ratios are for Netflix. And we take a look at where we're at currently, okay? And as I mentioned, we're right just under 40. Those are good numbers right there. Those are good numbers. So it's not like, Netflix's PE ratio is extremely elevated to what has been in the past. There were plenty of times in the bear market, when the PE ratio was around 29, we had 18, 13, 26, right? So there were some times where it was much lower. But we're in a thriving bull market right now, okay? And valuations are going to be raised and they're going to be higher. It's very common, rather, I should say, to see valuations much higher inside of a nice report like this, right? And also in a nice bull market that we're in right now as well. So just keep that in mind. I think that'll wrap up today's video. Okay, we did a brief technical analysis, brief comparison analysis, took a look at some of the estimates. I really just wanted to share the OpenBB terminal with you guys. There's some really great and amazing stuff that you can do with this. I really like this platform a lot, and I'm going to be bringing some more content to you guys from the OpenBB terminal in the future. Again, not sponsored by them or anything. I just think it's really cool, really interesting, and some really powerful things that you can do with this. So check it out yourself. Okay, just Google it, the OpenBB terminal, um, and I think it'll be well worth your time to mess around with it and learn, and you'll be able to come up with some really useful things.